is India's #1 news network, and you're watching News9, English news as it should be.
Hello and welcome. You're watching Morning Brief. I'm Shweta Kothari. On the show today, we will be tracking the key indicators for markets and discuss whether markets will continue their winning momentum in the coming week ahead, with Mohit Gang coming up very shortly on Morning Brief at 9. And you're watching Morning Brief at 9. Let's take a quick look at stories we are tracking this morning. Foreign investors continue to pull back money from Indian equity market, withdrawing over 24,753 crore rupees in the first week of March. Escalating global trade tensions and lackluster corporate earnings continue to abate FII pullouts. Combined market value of 7 of top 10 most valued companies surged by 2.1 trillion rupees last week, with Reliance Industries and Tata Consultancy Services emerging as biggest gainers. The Sensex climbed 1.5% and Nifty rose over 1.9%. India's foreign exchange reserves fell by $1.78 billion in the week ending 28th of February, bringing the total to $638.6 billion, touching an 11th-month low after nearly 4 continuous months of decline, as per the latest RBI data. And as geopolitical tensions evolve into new forms, 40% of board members and C-suite executives are now identifying economic conditions as the most worrying significant factor for their organizations over the next 2 to 3 years, according to a report by Protiviti. India and European Union will start 10th round of negotiations for the bilateral FTA, or the Free Trade Agreement, starting today, with a clear deadline for it to finalize by the end of the year. And transparency is important to SEBI. The market regulator will now reveal conflict of interest of its employees. The new chairman, TUHIN PANDEY, says amid allegations of conflict of interest with previous chair Madhipuri Butch. And of the 3,400 Ola showrooms, only 100 locations have trade certificates required under the Indian Motor Vehicle Act. Bloomberg News investigation reveals transport officials are investigating Ola showrooms across the country. And PepsiCo aims to double its revenue in India over the next 5 years, viewing the country as a key anchor market where it is making aggressive investments to expand capacity. Its India and South Asia CEO told the media. Deloitte employees in the US tax division told that the office attendance will be considered at par with their performance evaluation, which could impact their bonuses. Staff expected to be present at a Deloitte office or a client site within 2 to 3 days per week. Our top story at this hour: foreign investors are continuing to pull back from Indian equities, withdrawing nearly 24,753 crore rupees in just the first week of March. This follows a massive outflow of 34,574 crore rupees in the entire month of February and 78,000 crore rupees in the month of January. This means that foreign portfolio investors of FPIs have now pulled out a staggering 1.3 trillion rupees in 2025 alone, marking 13 straight weeks of net outflows since mid-December last year. In fact, FPIs have offloaded $17.1 billion worth of Indian shares so far. experts say that this exodus is being driven by both global as well as domestic concerns. Remember, escalating trade tensions with the US, of raising tariffs on key trade partners like Mexico, Canada and China, and even India have hit market sentiments worldwide, also in Asia. And with weak company profits adding to the uncertainty, investors are today careful, with the FPIs increasingly pulling out of India as an emerging developing economy and making that investment in China and in the US. And India's, in fact, top companies saw a massive boost in their market value last week, with 7 out of 10 most valuable firms on Nifty adding a combine of 2.1 lakh crore rupees. Reliance Industries and Tata Consultancy Services emerged as the biggest gainer. The stock market rallied last week, and it was reflected in various indices, including the BSE Sensex, which rose over 1100 points, and Nifty rose over 2% in last week alone. Reliance Industries led the surge, adding nearly 67,000 crore rupees to its market value, bringing its total over 16 lakh crore rupees. The market value as of last week was 16.9 lakh crore rupees. TCS followed with gains of over 46,000 crores, reclaiming its spot as the second most valuable company in India, following which State Bank of India, Bharti Airtel, ITC, ICICI Bank and Hindustan Unilever also posted strong gains, as in adding thousands of crores of rupees in their valuation and leading to overall MCAP rising substantially in the week gone by. However, not all companies saw positive momentum. HDFC Bank took the biggest hit, losing nearly 32,000 crore rupees in market value, while Bajaj Finance and Infosys also saw declines. Now, despite a few setbacks, the broader market remained upbeat, with investors hopeful about continued economic growth and momentum in the week to come. And India's foreign exchange reserves have dropped by as much as $1.78 billion, bringing the total to $638.6 billion as of February 28th, which is the last working day of February this year. This marks an 11-month low, according to the Reserve Bank of India and its latest stats and figures. Now, Forex reserves help stabilize, remember, the Indian economy, and it supports the rupee against global currency fluctuation. Now, over the past year, India's reserves have been unpredictable. In September of 2023, they hit a record high of $704.89 billion, but since then, they have fallen by almost 10%. Experts say that this decline is mainly due to RBI's effort to control rupee's value, which has been trading near its lowest levels against the US dollar in the past 6 months. Breaking it down further, India's foreign currency assets are, remember, at the moment at $543.35 billion, while the gold reserves are valued at $73.27 billion. The reserves cover about 10 to 11 months of projected imports, acting as a financial cushion. Now, in 2023, India added about $58 billion to its reserves after a sharp $71 billion drop in 2022. This year alone, the reserves have grown by $20 billion so far. Now, RBI plays a key role in managing these reserves, selling dollar when the rupee weakens and buying when the rupee strengthens. While most of the reserves are in US dollars, smaller portions are held in euros, in yen and in pound. With global economic uncertainties, these reserves are essential to keep India's financial system stable. And a new report by Protiviti has found that 40% of top business leaders see economic conditions as the biggest risk for their companies over the next 2 to 3 years. This concern comes as inflation and global market changes and rising cost continues to put pressure on businesses in India as well as worldwide. Now, since COVID-19 pandemic, many economies have struggled to return to normal, and challenges like trade restrictions, supply chain issues and changing financial policies have made things even tougher. Adding to the uncertainty is, of course, the geopolitical tensions and countries focusing more on their own economies rather than global trade, which have now increased the risk to global economies, particularly India. Now, businesses must now adjust to a more unpredictable economic environment. However, despite these concerns, many business leaders remain hopeful. They believe that their companies can adapt and find ways to overcome these difficulties. And with careful planning and strong strategies, they aim to stay competitive even in these uncertain times. To sum it up, while economic risks remain high, businesses are confident that they can navigate these challenges effectively. And moving on now, Ola Electric, the Bengaluru-based electric scooter manufacturer, is facing legal challenges across India despite its rapid growth, which led to its expansion of 4,000 physical locations and stores since 2022. A recent investigation carried out by Bloomberg reveals that over 95% of these showrooms lack the mandatory trade certificate required under the Motor Vehicle Act. Now, in regards to the customer complaints, transport authorities in several states have also now started conducting raids. They have closed showrooms, seized vehicles and issued show cause notice to the company. The Motor Vehicle Act states that all auto showrooms must display a valid trade certificate if they keep unregistered vehicles. Now, Ola Electric's rapid shift from a digital-only sales model to establishing thousands of physical outlets aim to improve customer experience. However, this expansion has encountered compliance issues, leading to increased scrutiny from regulatory bodies. The company has acknowledged these changes and challenges and expressed its commitment to resolving them promptly. Ola Electric aims to work closely, it says, with authorities to ensure that all operations align with legal and safety standards. But for now, it is getting difficult for Bhavish Agrawal and Ola, with authorities now increasingly scrutinizing many of the 4,000 stores which were set up since 2022. There is a mounting pressure on Bhavish Agrawal to comply with the law of the land. Now, PepsiCo is setting its sight on rapid expansion in India, aiming to double its revenue in the next 5 years. The company sees India as a key market and it's making aggressive investments to boost its growth in India. PepsiCo India and South Asia CEO Jagrut Kotecha said that India will be a major driver for the company's global revenues. Double-digit growth already in place. The country is now among PepsiCo's top 3 markets for food, snacks and beverages. To meet rising demand, the company has been expanding its manufacturing capacity, investing in new plants in Uttar Pradesh and in Assam, as well as other parts of the country. PepsiCo also plans to now open 2 more facilities, including one in South India. Currently, India ranks among the top 15 markets for the company, but Kotecha, the CEO, expects it to climb even higher in the coming years ahead. Remember, the company, which re-entered Indian market in 1990s after a long absence, has been gaining market share in both snacks as well as beverages. And time now for a short break. We'll be back with more news and stories on the other side. You are watching Morning Brief at 9.
What does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. Sodium DMD Rebar, true inner strength.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. one that starts at your desk and sends a statement to the world. To the Nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the Nines, for the leaders of today and the visionaries of tomorrow.
मैं और आप, हम अलग कहाँ हैं?
Gill on 199.
अपनी अपनी मंजिल पर हम दोनों की नजर है और उसके लिए हम जी जान लगाकर मेहनत करते हैं। पर कभी कभी
He's out on 199.
मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the brand walas.
I know that you and I, we are dreamers. With our heads up in the sky, we're flying free. Whatever it takes, we're gonna own this.
For an India that's chasing its dreams, this is the drive of your dreams. Introducing the all-new Skoda Kailak. Own your dream.
Skoda. It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense. They have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
We have close to 600 million out of the 1.4 billion in our country who are under the age of 25, and 65% of our population is under 35.
We all know that if you have a choice of pilot at Air India, and one has read the book, the other one has saw the TikTok movie, and the third one has went through a simulator wins, right?
The employable youth is only increasing. We are one of the youngest nations in terms of skilled talent.
There is a mismatch in cities like Bangalore, Chennai, Hyderabad.
How do you impart a pedagogy where students are just not sleeping inside the class, which is typically the case in the best of business schools as well as undergrad colleges in India? Because a lot of what is being taught in the classes, students don't find that applicable in the real world.
I find it extremely difficult to hire people because you don't get right skills.
This and more streaming on News9 Plus. Download now.
Light, camera and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9. I'm Shweta Kothari. The Indian equity markets showed promise last week. The Nifty 50 ended a 3-week slide, closing nearly 2% higher. The combined market value of 7 of the top 10 most valuable companies increased by 2.1 lakh crore rupees last week, with Reliance Industries and TCS leading the gains. Now, the key factors that resulted in a positive upturn for the markets include macroeconomic indicators, a drop in the dollar index, and RBI's liquidity. Going forward, whether stock markets will continue to rebound, and what are the cues to watch out for? Let's talk about that. Joining us on the show is Mohit Gang. Mohit, thank you very much for taking time out. I think the first question first for all the retail investors out there today, what is the expectation from the markets going into this week? Our markets did end their losing streak last week. Will the momentum continue?
Thank you so much, Shweta, for having me on your show. Look, I think it's anyone's guess out there, right? Every day morning when you wake up, you figure out there is some news flow around the globe, especially coming out from US in terms of tariffs, in terms of how the dollar index has reacted, in terms of maybe some macro data also, let's say the non-farm payroll or something like that, right? So I think we are currently completely hitched to US, and for whatever chatter we have had in terms of decoupling and everything else, but I think right now the market is completely trying and taking out cues from US. Fundamentally, I think from an Indian perspective, we have slowed down. Yes, there has been a slowdown in the corporate earnings and so on and so forth. But my sense is we need a positive trigger for market to actually sustain this momentum and sustain this rally. Otherwise, I think we'll completely be range bound.
All right, and looking at the markets open this morning, Mohit, on your screens right now, Nifty, Sensex both opening in green, albeit very marginally so. It's a flattish opening there for Nifty, up 0.03%, holding just above the 22,550 mark at 559. Sensex is also marginally up at 74,361 as of 9:15 at open this morning. Mid cap, small cap, more momentum there. Mid cap up 0.39% at 49,381. Small cap up 0.5% at 15,583. India Wix, the volatility index is lower, so perhaps that's some good news. It's lower and at about 14 this morning. Mohit, I think this is the fourth consecutive day markets opening now in green, and essentially, as you pointed out, this is on the back of the fact that the US markets also closed in green as of Friday. So we are taking cue from what's happening in the US specifically, and a lot of market moving action there happening vis-a-vis the tariff war, the retaliatory tariffs, and now counter tariffs that are likely to kick in starting today.
Yeah, so look, as I mentioned, it's very difficult to gauge the actual magnitude of how these tariffs will play out. We have seen it 2 or 3 times prior, which is the tariffs have been announced, the dates have been postponed, then tariffs have been marginalized, the rates have been reduced, some items have been exempted, so on and so forth, right? So I think markets will play out the scenario for next quarter or so till such time that we exactly can measure the magnitude and impact on the global economy, on the US economy, and then obviously on the Indian economy, right? So till then it's very difficult to call out the direction of the market. I don't think so we will break big time unless there is a negative news or unless there is a big shocker which comes out from global markets. And in the same manner, to go up substantially above 22,800, it would require a big trigger in the market. It would require some kicker, some positive news flow. So till then, I think we are perhaps.
What could that be news flow? What could that news flow be? Given that we are of course awaiting inflation data, we are awaiting IIP data. Would it be general one of the macro triggers, or are you expecting some sort of big announcement there as far as tariffs is concerned? If that's one cue that's moving the markets.
Look, I think one big cue could possibly be that if the tariff announcement on India is not as harsh as it seems out to be, right? Though President Trump has been calling out India this weekend also, I think he called out India specifically for being a very high tariff country. And I think this is now more political than it is economical. So we'll have to wait and watch as to how India reduces tariffs on certain goods, what is the extent and what is the damage done on the Indian local markets out here, if any, right? So my sense is otherwise it's very difficult to clutch at straws. The IIP numbers, the inflation numbers, those are all marginal, Shweta. It won't like move the needle big time, right? So I think also what will happen is once we are past one quarter and once we enter the new financial year, the base effect kicks in. The last year base was extremely poor. We come off from a very high base of inflation. We come off from a very low base of IIP numbers and very low GDP numbers. So the base effect will kick in, and this year possibly the numbers from second quarter or the post the first quarter end would start looking reasonably okay. And if we have decent monsoons, then we would have all the kickers to again bounce back.
All right. In fact, discussing some of those gains made last week comes primarily on the back of domestic equity investors, putting up a fight. Because if you look at FII action last week, in the first week of March itself, India foreign outflow was to the tune of 24,753 crore rupees. In fact, total in 2025 so far, FIIs have pulled out 1.37 trillion rupee. Is India not lucrative enough, Mohit? Is India not going to be lucrative enough? When can we see some sort of reversal there as far as FII is concerned? Because our fundamentals remain strong right now. The data goes on to support that our GDP is on a growth path, inflation is under control. So what's not working there as far as FIIs is concerned?
Right. Shweta, look, so in markets, it's never an absolute answer. It's always a relative answer. So relatively speaking, are we a good trade for FIIs right now? Perhaps not. Given the way rupee has depreciated, given the way there is uncertainty, and given the way US bond yields are still fairly high. So US bond yields, though have eased off from a high of 4.75, they're still at 4.2, 4.3 levels, right? So it's substantially high in spite of so many rate reductions in US. So till such time that the US continues to remain a safer haven, adjusted for dollar appreciation, and the kind of other things which FIIs will have to perhaps pay for while entering into Indian markets, and the uncertainty which looms large on US tariffs and other things, I think relatively speaking, we are not a great spot right now for FIIs. Simultaneously, if you see China on a valuation matrix, I think China looks extremely attractive. It's quoting at almost 11-12 times price to earnings multiple as compared to our markets. Even after correction, we are quoting at almost 20-21 times multiple, right? So it's always a relative sense in the market. Right now, I think a better trade is FIIs pulling back money to US till such time that there is a substantial rate reduction, yield reduction in US, or the currency depreciation of rupee kind of stems in. Till such time, I think the trade looks more lopsided in favor of US.
All right, trade looking more lopsided. Let's also quickly take a look at the heat map there on our screens right now, Mohit, very, very shortly, where you can see it's a mixed bag as far as electronic stocks is concerned. They're up this morning. Other stocks, including finance, mostly in the red, retail in the red, health, and consumer services, again a mixed bag. All in all, it does look like markets are picking on different cues as of this morning. I think primarily is on the back of the fact that there is some sort of retaliatory tariff war, which is also likely to kick in as far as China is concerned. How's that likely to poise Indian markets and put Indian markets? If China were to retaliate, and it said it will, Mohit, a 15% retaliatory tariffs, how is that going to impact Indian markets and Asian markets?
Again, these are all very complex global geopolitical scenarios, Shweta. Very difficult to call out one-on-one as to what the impact on India will be. But my larger take on this is that if China and US were to go on to a tariff war, India perhaps should be a beneficiary, right? Because US will have to find out an alternative market, and we can see some signs of development that India can perhaps be a big a big importer of US energy in times to come, right? So I think that could be one area where India and US could deepen their trade relationship. The second part is where China kind of hikes its tariff on US products. China will have to find alternate markets because the Chinese supply won't stop, the Chinese manufacturing won't stop, and China flooding other markets might perhaps also mean that some of the larger beneficial effect flows to India also. Or alternatively speaking, if US were to accept less of Chinese good, perhaps India might find a market with some of its goods in US. So again, very complex, can't generalize. You have to take it piece by piece. You have to take it product by product, service by service. So it's very difficult to figure out. That's what I'm saying. For next 3 months, till such time that the steam settles off completely and we know the exact extent and magnitude, it's very difficult to call out markets, and markets will also find very difficult to find some semblance of hope otherwise. So I think it's a wait and watch scenario.
In what scenario, Mohit? But before I let you go, I have to ask you, do you believe the valuations at this point are now justified? Do you think the markets have now bottomed out? I know you said there is no straight yes or no answer. It's rather very complex, variety of factors playing in from dollar index to what's happening as far as tariff wars is concerned. How will those be retaliated by different countries? But all in all, do you think the valuations for India at this point are now justified? I asked that question earlier to another guest and they said, yes, they are. And I think the green shoots are more likely starting this week.
Oh, absolutely. Look, on a broader level, markets are looking juicy. Markets are looking extremely attractive right now. There are pockets which are still frothy in mid and small cap segments, but you can't call the entire market expensive now. We have long come off from that level. I think the large cap index is looking extremely attractive. It's quoting at a very reasonable multiple. In fact, the Indian market is now quoting below US markets on the P multiples, basically. Right. So mid and small cap, maybe some pockets are still frothy, but I think on a broader level, markets have corrected reasonably well. And one has to be very cautious and careful while entering the markets. I would still say that enter in a staggered manner over next 2 to 3 odd months. Don't just jump in with your entire pot of liquidity right now. I think perhaps there might be a better opportunity lurking around the corner.
All right, there could be a better opportunity lurking around the corner. But froth in the market, but I think markets looking juicy is what Mohit Gang is suggesting at the moment. Thank you very much, sir, for taking time out for joining us here on News9.
Thank you.
And as we continue to discuss markets, what is moving markets, let's also shift focus now to another domestic story coming in by the way of Lalit Modi. In fact, days after former IPL founder Lalit Modi moved to surrender his Indian passport, troubles are now mounting for him as far as his citizenship to Vanuatu is concerned. The country's Prime Minister Jotham Napath has now directed authorities to cancel his passport, which was issued to Modi, alleging that the fugitive businessman is trying to evade extradition. This comes after international media reports highlighted that Lalit Modi remains a wanted criminal by Indian agencies over allegations of financial embezzlement during his tenure at the helm of IPL. Now, Vanuatu's official statement confirmed the cancellation order, citing concerns over his citizenship application. Interestingly, the release also notes that Interpol has twice rejected India's request for a red notice against Modi, citing insufficient judicial evidence. And now the alert has been issued and his Vanuatu citizenship bid would be automatically blocked. So trouble there mounting for Lalit Modi. Let's now take a look at stories we are tracking worldwide. US President Donald Trump threatens a new tariff on Canadian dairy and lumber, escalating trade tensions between the two neighboring countries. US adds 151,000 jobs in the month of February, but trade uncertainty and federal spending cuts raise concerns for labor market stability. And European leaders push for higher defense spending amid Russia-Ukraine war, while China braces for economic impact of US tariffs. US stocks rebound as Fed Chair Jerome Powell reassures on economy, but trade uncertainty still drives weekly losses. Federal job cuts trigger backlash as Republican voters in Western Virginia rethink support and economic instability. Trump says Putin is easier to deal with than Zelensky as US considers large-scale sanctions on Russia amid escalating war in Ukraine. And US to consider using Starlink access as leverage in Ukraine talks, while Eutelsat gains attention as potential alternative. German election winner Friedrich Merz Conservatives and Germany's Social Democrats conclude preliminary coalition talks, paving the way for formal negotiations on migration, finance and economic policies. China's imports slump unexpectedly while exports lose momentum amid escalating US tariff pressures. All those stories and more after this short break.
मैं और आप एक जैसे ही तो हैं। एक बार मंजिल दिख जाए
One shot of a century.
तो उसे पाने के लिए हम अपने कदमों को नहीं रोकते।
That looks out.
पर कभी कभी मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
I know that you and I, we are dreamers. Our heads up in the sky, we're flying free. Whatever it takes, we're gonna own this.
For an India that's chasing its dreams, this is the drive of your dreams. Introducing the all-new Škoda Kailak. Own your dream.
Škoda.
Every brand tells a story. And they are the storytellers. The Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Welcome back. You're watching Morning Brief at 9. US President Donald Trump is once again eyeing Canada over trade. He slammed what he called tremendously high Canadian tariffs on dairy and lumber, warning that his administration could impose reciprocal tariffs. His latest trade threat comes just a day after suspending the 25% tariff on Canada-Mexico goods, tariffs he had earlier imposed in the week. But now, Donald Trump says new reciprocal tariffs could take effect on 2nd of April to balance trade terms. Under the US-Mexico-Canada agreement, the most of North American goods move tariff-free, but Canada's high dairy tariffs remain an exception. Meanwhile, the US is also set to hike tariffs on steel and aluminium this Wednesday, a move that could further strain relations between its top metal suppliers, Canada and Mexico. And it's not just Canada. Trump also called out India's high tariff, but says New Delhi has agreed to lower them. Meanwhile, Donald Trump met with top cryptocurrency industry leaders at the White House to discuss his vision of making the US the crypto capital of the world. Meeting focused on how the government plans to support industry while addressing regulatory challenges vis-a-vis cryptocurrency.
Last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet, and we're taking historic action to deliver on that promise, as you know, around the table. I also want to express my strong support for the efforts of lawmakers in Congress as they work on bills to provide regulatory certainty for dollar-backed stablecoins and the digital assets market. They're working very hard on that. And as you know, China is pushing forward and very strongly as usual. But we're way in the lead, as we are in AI and other things, and we want to stay there. So I thought this was very important, and we have some brilliant people sitting around this table, and it's an honor to have you involved, but we want to stay at the forefront of everything.
And US jobs growth gained momentum in the month of February, but the unemployment rate and concerns surged to 4.1%. While the labour market remains strong, economists warn that uncertainty over trade policy and looming federal spending cuts would weaken job growth in the months ahead. According to experts, businesses may hold back on hiring if economic conditions become more uncertain in months to come.
U.S. employers added 151,000 jobs in February, but cracks are emerging in the once resilient labor market. Amid rising uncertainty over U.S. trade policy and deep federal government spending cuts, the pickup in payroll growth was less than the 160,000 jobs economists had forecast. That brought little relief to U.S. investors, who've been rattled by tariff-related market turbulence. The Labor Department's closely watched jobs report on Friday, the first under President Donald Trump's watch, also showed the unemployment rate rising to 4.1% last month. Economists said the Trump administration's whiplash trade policy was making it difficult for businesses to plan ahead, adding that the moves could undercut economic growth this year. Meanwhile, tech billionaire Elon Musk's Department of Government Efficiency, or DOGE, has fired thousands of federal employees in an unprecedented effort to shrink the government and slash spending. A bigger hit to government payrolls is expected in March's jobs report.
From European leaders ramping up defense spending in response to Russia's war in Ukraine, concerns over US isolationism to China's dealing with effects of US trade taxes. Here's a roundup of all business and finance stories in the week ahead.
From Europe's plans to increase defense spending to key US inflation numbers, these are the stories to watch in business and finance in the coming week. Faced with Russia's war in Ukraine and fears of US isolationism, European leaders have backed plans for more defense spending. The significance is not lost on markets. The euro and shares are surging, so are German bond yields as investors bet more spending means more borrowing. Suddenly, the US lead in long-term trend growth is no longer a given, and investors are re-rating European assets. Global growth concerns have shot back onto the market's radar as weakening US data and growing trade tensions hurt consumer confidence and business activity. Even second-tier US data will be closely watched, while the Bank of Canada could cut rates when it meets on Wednesday. While US President Donald Trump suspended the 25% tariffs he imposed on most goods from Canada and Mexico, his fluctuating trade policy continues to fan worries about inflation growth. Morgan Stanley warned that Trump's tariffs on China, Mexico, and Canada could slow growth in the US and Canada and push Mexico into recession. Wednesday's US consumer price report could fan investor fears about still warm inflation, just as Trump's tariffs on key trading partners could provide a jolt to domestic prices. January CPI jumped 0.5%, the biggest gain since August 2023. Another hot reading could confound recent bets on more Federal Reserve rate cuts this year. On Trump's list of tariff targets, China stands out, not least for how well its markets have weathered the tumult. China's central bank has deftly guided the yuan in a stable range against the dollar, and Hong Kong's Hang Seng Index is up 21% this year, making it the best performing major global market. And that's without the kind of reprieves that Washington has afforded Ottawa and Mexico City. Inflation figures and loan data in the coming days will offer the latest reading of the consumer pulse.
The US stocks closed higher on Friday after Federal Reserve Chair Jerome Powell said that the economy was in a good place. But despite the gains, uncertainty over US trade policy drove Wall Street to its biggest weekly decline in months. More details in this report.
U.S. stocks ended higher on Friday, rebounding from early declines to give the Dow and S&P 500 a half percentage point gain each, while the Nasdaq climbed 0.7%. Stocks bounced back after remarks from Federal Reserve Chair Jerome Powell at an economic forum in New York City.
Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place.
Powell also said it remains to be seen if President Donald Trump's tariff plans will prove to be inflationary. Stocks still posted a weekly loss due to uncertainty over Trump's seesaw tariff announcements. Meanwhile, his administration's move to lay off thousands of federal workers were not reflected in Friday's highly anticipated jobs report for February, which showed employers added 151,000 jobs last month. Skylar Wienand is Chief Investment Officer at Reagan Capital.
I think the market was really worried that that would show up in February job numbers, and it's breathing a sigh of relief. Generally, stocks are up about 0.5 point today after having a really tumultuous last 2 weeks. NASDAQ's down around 6% for the year. So the market's breathing a little bit of a sigh of relief that the jobs numbers came in as expected and not much worse. That could hint at some melee in the economy. We're not seeing that yet. I think we got to wait another month where that might peek through.
Stocks on the move included Hewlett-Packard Enterprise, which slumped after the company said its annual profit forecast would be hit by U.S. tariffs. Shares of Costco fell after the retailer missed Wall Street estimates on quarterly earnings as the cost of merchandise increased. But shares of Broadcom gained after the chipmaker eased investor worries about artificial intelligence infrastructure demand with a strong second quarter forecast. Shares of AI powerhouse Nvidia also finished higher.
A former supporter of President Donald Trump says her views have changed after losing her civil service job. She is among a small group of voters who once backed the administration but are now protesting alongside opponents after federal job cuts hit their community. Experts warn that job losses could extend beyond a single agency, affecting more workers in the region.
Jennifer Piggott voted for Trump in the November election. Then in February, she was fired from her civil service job.
Absolutely, I feel a little bit betrayed.
She was among more than 125 people dismissed last month from the Treasury Department's Bureau of Fiscal Service in Parkersburg, West Virginia.
There's always that back and forth conversation now. It's like, you knew this was coming, but we didn't. Like, nobody that I've talked to understood the devastation that having this administration in office would do to our lives.
No kings, no tyrants, no kings, no tyrants.
The cuts have shaken up a community that overwhelmingly voted for Trump. He won West Virginia with 70% of the vote, one of his biggest victories. But the betrayal felt by Piggott, a church-going conservative and three-time Trump voter, comes as political analysts are examining early signs of a possible backlash in Republican strongholds like Parkersburg, where the government-slashing efforts of Trump and Doge are beginning to hit home.
Elon Musk has basically taken over our government and has calling the shots, unfortunately, it seems to be.
A handful of Republican voters who lost their federal jobs joined Democrats at a recent anti-Doge protest near the Bureau of Fiscal Service offices in Parkersburg. But the federal job losses in the state could soon extend beyond the BFS building, says West Virginia University economics professor John Deskins.
West Virginia is at the very top of the states in terms of the federal workforce as a share of total workforce in the state. So if the federal layoffs happen, if they hit West Virginia, we stand to suffer a disproportionate share when those jobs disappear, when that income disappears, when that spending leaves the state economy.
But in Reuters interviews with 36 workers, business owners, and politicians in Parkersburg, nearly all said that Trump's focus on cutting government spending was a worthy goal. And Reuters Ipsos polling shows Americans' attitude toward Trump are so far essentially unchanged since he began firing federal workers in February. As of this week, his approval rating was holding steady at 44%.
Cutting costs and waste and fraud and. We love that big picture. I love that big picture. My friends, we were excited about that because it is true. But again, I can't help but go back to the fact that what is the decisions that you're making right now solving in the big picture? It's So the concept of voting for that again, voting for Elon Musk essentially to wreck people's lives, I can't do it.
The economic impact of the mass dismissals across America may not be immediately felt. So far, 100,000 government workers have been fired or taken a buyout. Parkersburg is bracing for another round of layoffs, with all government agencies ordered to make plans to cut career staff by March 13th.
And US President Donald Trump said he found it easier to work with Russian President Vladimir Putin than with Ukrainian President Volodymyr Zelensky in efforts to begin talks around the end of the Russia's 2022 invasion of Ukraine. His remarks come as the administration considers imposing large-scale sanctions on Moscow, likely indicating a tougher stance amid ongoing tensions between the two countries.
Despite the Russia. Donald Trump on Friday told reporters he found it easier to deal with Russian President Vladimir Putin than Ukrainian President Volodymyr Zelensky. And he said he believed the Russian leader, who launched an unprovoked attack on Ukraine more than 3 years ago, when Putin said he sought peace. Yeah, no, I believe him. I think we're doing very well with Russia. But right now they're bombing the hell out of Ukraine. And I'm finding it more difficult, frankly, to deal with Ukraine. And they don't have the cards. Earlier on Friday, the U.S. president had raised the prospect of imposing large-scale sanctions on Russia. It comes after a Reuters report earlier this week that the White House was preparing to give Russia possible sanctions relief as part of the push to end the war and improve diplomatic and economic ties with Moscow.
If you didn't have our military equipment, this war would have been over in 2 weeks.
In 3 days, I heard it from Putin.
3 years of solid support for Ukraine was erased exactly 1 week ago in a shouting match in the Oval Office between Trump and Zelensky. Trump afterward canceled U.S. support for Ukraine and ended the sharing of crucial intelligence, measures that stunned allies across Europe and were met with approval in Moscow. Officials in Washington and Kiev have tried to patch things up since, and a U.S. delegation is set to meet with counterparts from Ukraine for talks in Saudi Arabia next week. Trump has continued to suggest Ukrainian leaders need to prove they are serious about ending the war they did not start. As you know, we're meeting in Saudi Arabia on sometime next week, early. And we're talking, I find that in terms of getting a final settlement, it may be easier dealing with Russia, which is surprising because they have all the cards. I mean, and they're bombing the hell out of them right now. The loss of American support comes at a crucial time for the Ukrainian military. Russian forces have almost surrounded thousands of Ukrainian troops who stormed into Russia's Kursk region last summer. Open-source maps show a Russian counteroffensive has nearly cut the Ukrainian force in Kursk in two and separated the main group from its principal supply lines.
And meanwhile, concerns are now growing over Ukraine's access to Elon Musk's Starlink satellite internet system, which has played a crucial role in maintaining military communications throughout the ongoing war with Russia. The possibility of losing this key service has sparked investor interest in Starlink's smaller European rival, Eutelsat. Remember, since Russia's invasion in February of 2022, Ukraine's fixed line and mobile networks have suffered extensive damage from bombing. Starlink has helped bridge the gap by providing tens of thousands of satellite dishes and terminals, ensuring connectivity where traditional infrastructure has failed the system. I leave you with this report.
The United States might use access to Elon Musk's satellite internet system, Starlink, as a lever in talks with Ukraine over its critical minerals, sources familiar with the matter have said. And that's put focus on Starlink's smaller European rival. But could Eutelsat help to replace Starlink in Ukraine? Ukraine's fixed line and mobile networks have been badly damaged by bombing since Russia invaded in February 2022. Starlink has helped fill the void by supplying tens of thousands of its small satellite dishes with terminals. They're used to bounce signals off a constellation of satellites overhead. Most are used by Ukraine's armed forces, with units often talking to each other via Starlink. It has become virtually indispensable for battlefield command and control. However, this Ukrainian military commander said in February that at the start of the war they managed without Starlink, and they will continue to manage with or without it. Originally, SpaceX helped to fund the provision of Starlink to Ukraine. The US government then took over, though last month Poland said it had been paying Ukraine's Starlink subscription and would continue to do so.
Rodolph Felmer from Eutelsat.
Eutelsat already supports government and institutional communications in Ukraine and has said it is talking to the EU about providing additional services. Its stock price has more than quadrupled since an explosive clash at the end of February between Ukraine's President Volodymyr Zelensky and US President Donald Trump at the White House. Besides Starlink, the Franco-British company controls the only operational global coverage constellation of satellites in low Earth orbit, or LEO. But Starlink has more than 7,000 LEO satellites, allowing it to reach more users around the world and offer higher data speeds. Eutelsat says its 630-odd LEO satellites, backed up by 35 linked satellites in higher orbit, can offer the same capabilities as Starlink in Europe. Starlink promises broadband at up to 200 megabits per second, Eutelsat at 150. And there's also the matter of cost. Eutelsat's OneWeb terminals cost as much as $10,000, plus a monthly subscription price. Starlink charges Ukrainian users a one-time payment of $589, in addition to a monthly subscription of $95 to $440, depending on the usage.
How was the meeting, Mr. Musk?
Global competition to Starlink is shaping up, but slowly. Luxembourg-based SES delivers some satellite services to NATO via its medium Earth orbit constellation of satellites. Some EU initiatives, such as IRIS² and GovSatcom, which Kyiv is interested in, will take years to become fully operational.
Crime will never go out of the society.
Crime is a part there.
We do know people who have shot people. We do know people who are criminals. They are real people. They are good, bad, ugly, everything is within us.
For me, particularly me,